Anita, another Fox News alert for you. Stocks up big, then giving it all back on a report that a second Bear Stearns hedge fund could be in trouble and maybe in need of a bailout. Add to that more worries on the home front. Existing home sales and prices falling again last month, but sales were actually up in the Northeast and Midwest. So is this housing scare overblown or the start of something that's getting bigger? Let's ask Jim Gillespie. Jim is the CEO of Coldwell Banker Real Estate. Dagan McDowell joins us as well. Jonathan Hoenig and Peter Schiff, author of Crash Proof, How to Profit from the Coming Economic Collapse. I'm just, upbeat leisure reading at night. All right, Jim, your view on this. I know you're in the industry,
yes,
but a lot of folks say your industry is going to really start stinking.
Well, I don't think the industry has started stinking. I don't think that we're in anywhere near the worst. I mean, 5.99 million resales announced by NAR this morning, right around the $6 million clip.
National Association of Realtors.
Yeah, exactly. That's 20% more than homes sold at the turn of the century. So, yes,
so
resales.
You're going back to the turn of the century for comparison purposes?
Well, it's only 7 years
right.
ago. Actually, if you compare it to the year 2005, we had over 7 million resales. Sure, we're down in units.
But you're still upbeat.
We're very much upbeat, and prices are holding. Prices
All right,
are holding
Peter,
steady.
what do you think of that? That crate hangers like you are making this much worse than it is.
Well, look, the problem is for the last several years, right, homeowners have been able to speculate in the real estate market by buying properties, putting none of their own money down, lying about their income, lying about their assets, committing themselves to mortgage payments they knew going in they could never make because Wall Street created all these structured products that transferred all the risks away from the borrowers to the lenders. Now these risks are blowing up. These loans are going bad. The lenders are about to lose a lot of money. And traditional lending standards...
So how bad does it get?
Well, here's what's going to happen. I mean, the 20% down payment is going to come back. The buyer is going to be required to put a sufficient enough down payment to have a risk, so he thinks twice before committing to a mortgage.
So I'm asking you, what happens in the interim?
Well, what has to happen is real estate prices have to collapse, and people have to start saving.
What's
so we
collapse?
Have to go through,
real quickly, what's collapse?
Real estate prices have to go down so that people can afford them.
I know that. How much?
Well, I think prices are going to get cut in half in many markets, and we're going to be in a recession because people have to save up those down payments.
I don't buy cut in half. I think that is way too extreme. Lower, yes. And the fear about these Bear Stearns hedge funds is very real because they were buying up mortgages during the boom days, fueling all the strong housing market. But if because of those problems at those hedge funds, more investors pull back from buying mortgages, it's going to make it more expensive, harder to get a mortgage, and that's harder
Jonathan,
on the housing market.
What do you say?
Well, I agree, but it's not just the hedge fund, Neil. I mean, every stock, every sector that has anything to do with housing, mortgages, even savings and loan now, these used to be market leaders. They are so weak right now, it's almost unbelievable.
So what are you saying?
Well, I just think it's, I'm a trader, and I don't think
it get worse? This is a beaten down group. How much worse? He just said 50% worse.
Neil, you're tough today. We haven't seen a capitulation yet. I think that's it. I mean, I think when we see a huge sell-off in names like Kim and DDR on the REIT side, or
would you agree with what he said?
Loans,
50% worse.
I'm talking about housing prices.
I know you're talking about housing prices. He follows the stocks. Usually they go in tandem.
I think the REITs, Neil. I think many of the REITs could absolutely fall 50%.
All right, so there you go.
The home builders are going to do the worst.
You better get a lead suit because it sounds horrible.
The thing that's okay. The subprime market, about 13.9% of those loans are in delinquent state. That means 90 days or more late. And quite a few of the problems are with the loan officers and some loan companies that actually have gone out of business. According to the National Association of Realtors, we're talking about 200,000 potential foreclosures of subprime loans. Mortgage Bankers Association puts that number at 450,000. That is less than 1 month's supply of properties. That is certainly not going to collapse the real estate market.
Except it's going to be a lot worse than that.
Let me finish. A quick glimmer of hope. All the worries about these hedge funds, you have money running into the safety of treasuries that is bringing down longer-term interest rates, which just 2 weeks ago
your industry really needs rates not to go backing up, because if they go backing up, Katie bar the door, right?
Well, they are going up. They're going a lot higher.
Near historic 40-year lows. Interest rates are over 6.5%.
But if they do, you're in deep doo-doo. So, all right, now, when you look at everything going on, Peter, you're saying what? What has to play out? The slightest backup in rates, and then it just sort of cascades?
We had a phony economy where people borrowed money against the inflated values in their homes, and we spent it on imported products. We ran up a huge trade deficit. We have no savings. This is going to have to unravel. Interest rates are going a lot higher.
Well, there's nothing phony about pretty good growth. There's nothing
No, we
phony
didn't.
about our productivity, and there's
No,
nothing phony
yes, there
about
is.
near record low unemployment.
No,
so
we didn't
what
have.
are you looking
no,
at?
the productivity is phony. What are we producing? We're running a huge trade deficit. We're buying what other people are producing. We're running up enormous debts. That's real.
All right,
debt
so
is
the
what's real.
corporations that are producing double-digit returns across all different sectors, they're just a mirage?
Well, a lot of it is because American consumers have been able to borrow money to buy their products. That's coming to an end, and a lot of that money came from extracting
All
home
right, so
equity.
let's
That equity's going
Mr.
away.
Real Estate, if he's right, then Americans are tapped out, and
Well,
your industry is done.
There's $9
You said it.
trillion worth of equity in real estate in this country. The value of real estate in this country is close to $20 trillion. There's $9 trillion of equity. That's pretty solid.
And incomes
No, it's
are growing
not.
much faster than inflation. That is a very good sign.
That's,
of stability.
whose
Jonathan,
definition of
final word.
inflation are you using?
Well, Neil, I think for people who own a home they can afford, I think
Yeah.
they'll ride out the ups and downs. But in terms of putting new money to work in real estate, I just don't. It's
Well,
so
Jonathan, we
incredibly
can't
weak.
be
I
like
just
you
wouldn't-
and pay for our homes in cash. But, guys, I want to thank you all very, very much. Well, Hugo Chavez going on a shopping spree to buy